Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, the EU has cut growth and inflation forecasts for the year of 2024, as well as that Donald Trump is to face his first criminal trial next month in a hush money case. We've got lots to talk about in the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is in regards to the EU and growth. Now, yesterday, the ECB downgraded its forecast on growth for the EU and Eurozone in 2024. This comes as higher interest rates once again weigh on economic activity. Now, this is very, very important to understand, but also something that we've covered many times and we're staying updated on always, because ultimately, as I've just said, it is so important to understanding markets, and especially understanding the markets of the Eurozone and anything related to that. So think the Euro, think the DAX, think the German Bund, anything like that. We're seeing great effects to those assets, to those markets, by what we're seeing with the EU, what we're seeing with the Eurozone, and what we're seeing with the ECB's predictions. Now, here we've spoken about, the ECB predictions before, but ultimately we've spoken about, the more recent data that we've seen from the ECB, as well as from the Eurozone as just a region, an economic region. Now, what have we seen? Well, over the past few months, over the past 3, 4, 5 months, we have seen serious issues arise within the Eurozone as a result of those higher interest rates that we have been seeing. Obviously, in a way to combat the higher inflation that we did see coming out of the period of COVID, a year or two ago, we did see central banks like the ECB start increasing interest rates to combat that, and since then we've seen that affect growth. Now, this is to be expected. Don't take this the wrong way. Ultimately, the ECB or the Fed or the Bank of England should expect to see growth slow should interest rates go up. That's a good sign in some ways, because ultimately it shows that you're cooling the market. It shows that probably less individuals are being added to payroll. The labor market's becoming more loose. Therefore, we're less likely to see wage growth. Therefore, less likely to see a wage price spiral and that kind of thing. And ultimately, that's why seeing growth slow down is not too bad. But in some sectors and in some ways, seeing certain drops in growth is very, very bad when we are seeing interest rates go up. For example, we've spoken about many times now, and it's really come from one article not too long ago on the German industry, and especially the German automobile manufacturing industry, as ultimately, as most people know, Germany is known for their automobile manufacturing industry. We've got BMW, Volkswagen, of course, as we spoke about yesterday, and many other car brands which obviously rely on Germany for its production, its innovation and that kind of thing, but especially its manufacturing plants and that kind of thing. And that sector has seen a great contraction recently as a result of these higher interest rates. It's just a fact that many of these factories can kind of not, be cost worthy in a nation like Germany if we're seeing, wages go up as a result of inflation, and at the same time, the corporate offices are struggling with, borrowing rates as a result of these higher interest rates. And along with that, we're seeing, of course, those higher energy prices driven by Russia's invasion into Ukraine. And that all culminated in this industry kind of taking a turn for the worst within Germany. And this has been, the same for many other industries within Germany. And we're now seeing the political ramifications from that, of course, the economic ramifications, but other ramifications which are important to note and are affecting markets. But here we're now seeing, kind of the fallout of that with future projections by the European Commission or ECB, as ultimately what data we talk about, what data we see over the part and have seen over the past 3 months, 2 months, 1 month, is ultimately going to be factored into any future predictions. But these predictions are still very important because it allows us to kind of understand where the ECB or the European Commission is at in their head in regards to the Eurozone economy, and where do they think that market is going to go. And this allows us as investors, traders, or even just those that are interested in markets to properly understand what's going on. Now, the European Commission, however, is also expecting inflation to be halved from highs last year, and we know that that's been a similar case for these top developed economies around the world, such as Britain's economy and the US's economy, which all of those three have all seen inflation drop at faster rates than previously expected over the last 4 or 5 months, and this is now kind of lent into certain investors believing that these central banks are to cut interest rates a lot earlier than we were previously expecting. Now, the Commission now expects the Eurozone GDP to grow 0.8%, as well as predicting the EU to grow 0.9%. This is down from 1.2% and 1.3% in the previous autumn forecast. Eurozone inflation is expected to drop to 2.7% this year, which is lower than 3.2% before. This all comes as markets price in the ECB cutting rates this year, starting in April, as we've just spoken about. Now, the ECB President Lagarde yesterday did caution, however, that they needed to see inflation is completely on track to hit its 2% target before rate cuts were to be pursued. The Commission went on to expect growth to pick up in 2024, with growth rising to 1.5% in the Eurozone and 1.7% in the EU. The reason for inflation expectations being reduced is largely driven by downward movements in energy and commodity prices, which have come down faster than previously expected. That said, like other central banks, the Commission is worried that issues within the Red Sea could cause inflationary pressures in European markets, and that is why I often talk about issues within the Middle East, or issues in regards to world trade as a result of geopolitics so much, because it really does create a great deal of inflationary pressure, and therefore we see the fallout of that in the charts. Now, 11 EU economies, including Germany, saw a contraction in growth in 2023. That said, the latest projections expect all members to see positive growth in 2024. So this is a very important topic to keep your eyes on. Obviously, we'll be looking at the Eurozone economy in a sense on the charts, also because we'll look at the Euro and other European markets. So stay around to see that. Next article to talk about, though, is to do with Donald Trump. Now, Trump next month will become the first ex-US president to face a criminal trial. This comes as a New York state judge declined to dismiss a hush money case against him. Now, of course, this is not the first time that we've spoken about Trump in regards to trials or court proceedings, as obviously before we've spoken about the issues to do with his businesses and the possibly and allegedly fraudulent ways he went about gaining loans on his own businesses, and we spoke about that in regards to New York once again, and the ramifications of that, or the consequences of that, of course, were that Donald Trump or his close associates, his close family, were not to be able to run his company, his billion, I'm not sure whether it's billion, but I believe it is $billion company, as a result of his fraudulent ways of gaining these loans, as it was kind of alleged that basically Donald Trump had inflated his real estate values or other kind of other asset values to go to these top investment banks, these top private banks, and ask for loans, and basically because he was offering more collateral by declaring a greater amount of collateral than he actually had, he was then able to get cheaper kind of rates, or be more likely to be able to actually get these loans, and that was kind of seen as fraudulent. But ultimately, Donald Trump is kind of writing off many of these criminal trials, or not criminal trials, but other kind of court proceedings, ultimately because this is in the lead up now, of course, to the 2024 presidential election. And so to most it kind of does seem a bit politically motivated, no matter kind of what political position you hold, just simply because we are now seeing all these trials wind up in the lead up to when Donald Trump, which is the favourite currently for the 2024 presidential election, him facing Biden as the favorite candidate, and now he's seeing all these court proceedings go against him, and this is another one to talk about. Now this case covers the details of hush money and allegedly he made payments to actress Stormy Daniels in the lead up to the 2016 presidential election. The court will select a jury on March the 25th, and the trial will last 6 weeks long. Trump has previously responded to the court case by labeling it as politically motivated act and as a unconstitutional act. According to the judge, Trump is being accused of paying an individual $130,000 in order to conceal his encounter with a lady in an effort to influence the 2016 election, before then falsifying 34 business records to cover the payoff. Cover up the payoff. A key lawyer for Trump, Todd Blanche, says the decision to go ahead with the trial is a great injustice, and the scheduling of the trial in the lead up to an election was interference in the election. Picking an impartial jury is also another issue, with the key question being of how to vet someone for being impartial for the kind of trial, and that's the key question on the court's mind. And the jurors may now ask the court now may ask jurors where they get their news from, and that kind of thing, because ultimately if we see a completely anti-Trump jury, we could definitely see this going against Trump, but obviously vice versa, we could definitely see Trump getting away with it, even if he is guilty. So that's why this is so important to understand, as ultimately this will be greatly affecting the US presidential election of 2024, which we know of course will affect the economy and different assets, and is also adding to world tensions. Just yesterday I believe we did hear that Putin does prefer Biden as a presidential leader, presidential candidate, ultimately because he's easier to predict and that kind of thing. So ultimately this election does weigh greatly on world tensions. Of course, we have the issue of the Russian invasion into Ukraine and the Ukrainian aid being held up within Congress. So lots of geopolitical tensions are being built up by this election in itself, and of course has great ramifications on markets directly because of economic policies as well. So this is why we're keeping on top of this topic, and make sure you stay on top of all things Donald Trump as well as anything US politics. That's all to talk about in the articles though. Next to talk about, of course, is the charts, where we do have a lot to talk about. And just as we begin on US indices and the Dow Jones to be specific, we have a great deal happening. As we can see here, price has now reacted to this key liquidity zone that we noted out maybe 2 days ago or so, and as well as that kind of existed just above that key Fibonacci retracement zone and level of 50%. We have now seen price run away to the upside from that level. Interestingly enough, though, we are now coming into contact with this previously, kind of held liquidity and resistance level. So it's hard to tell really whether price will sell off from this area or just continue to the upside. Definitely keep your eyes on the US 30, as ultimately, we have had a great deal of US economic data coming out recently, as well as news in relation to the Fed, and this is all pushing, of course, US equities one way or another. As we've just spoken about as well, world tensions and politics is also something which most people don't kind of think about always, but definitely those larger financial institutions are factoring in those key risks, and that's why we do see the ramifications of such issues on the markets. So make sure you understand what's going on in regards to that, just so you better understand what's going on with US equities. That said, just because we've come into contact with that 50% Fibonacci retracement zone and liquidity level, we could definitely be looking at price running its way up to this minus 27.2% Fibonacci extension level, and that would be no surprise to us really, simply because we have now exploited that key liquidity zone, that key Fibonacci retracement level, and now price is moving very bullish to the upside. So definitely keep your eyes on US equities. Next to talk about about though is the dollar, so still in relation to the US, of course. But interestingly enough, yesterday and the day before, we were kind of noting that, whilst the dollar had received a great deal of bullish momentum, obviously following some more hawkish data in regards to the Fed and US economy, in regards to inflation and that kind of thing, we were looking at the dollar still retracing ultimately, because price was becoming overvalued. You can just look at the RSI to kind of start getting a glimpse of that. But ultimately, it did start to seem like price was becoming overvalued. And generally, when price does break above these key liquidity zones, it will retrace, interact with that level and continue to the upside if we still have that bullish momentum. So we were kind of noting out this area around here, this key liquidity level, as an area where price could come down to and react with, and continue to the upside. That said, yesterday we have now seen price break through that key level, that 50% Fibonacci retracement level and key liquidity zone, and continue to the downside. That said, price has come into contact with the 78.60 Fibonacci retracement level. So, arguably there still is that kind of bullish momentum within the markets. So don't write that off too quick. But ultimately, price did break through that more important level of the 50%, as that kind of lined up with more so on the fundamental picture, but also the liquidity zone picture. So, keep your eyes on the dollar. Very interesting situation nonetheless. Eurozone, staying on the top of the dollar, saw the same thing, obviously mirrored. Price broke through the 38.20 Fibonacci retracement level, which lined up with this key area of liquidity and resistance. And so now we're kind of in this weird position where price is all the way to the upside, and is kind of waiting around, and has come into contact with that 78.60. But we can't, whilst we have seen kind of some distribution and accumulation around these levels over here, we can't say that there's too clear of an area of resistance or liquidity to basically start making assumptions of, okay, price is going to move away from there. So that's why price is kind of in a sticky situation for Euro USD at the moment, and we definitely need to keep our eyes on it to understand what's going on. Next to talk about though is pound yen. Pound yen is in a very interesting position after it has reacted to that 38.20 Fibonacci retracement level. We were expecting price to come down and kind of retrace to that 38.20 before moving to the upside. And obviously yesterday we got some very, very important fundamental news in regards to both the pound and the yen, where we did see both the UK economy basically contract more than previously expected, so contract by 0.3% rather than the expected 0.1%. As well as that, we did see the economy of Japan also contract. So that kind of created both very dovish messages for price, but ultimately it still does seem like we have this more hawkish outlook on pound yen. Maybe on pound, maybe that's just my bias kind of coming through, but it does seem like we do still have more upside potential on pound yen than we do have sell side opportunity. So still keep your eyes on pound yen nonetheless. Bitcoin, very important to note, of course, since price just keeps pushing to the upside. Yesterday, though, after making new highs, it does seem like price has stalled out. But interestingly enough, if we look at the RSI, we are clearly seeing a bearish divergence form. So we could definitely see a sell-off on Bitcoin. If we just go back to the last time we saw that, that was, of course, the time just before, the Bitcoin ETFs were approved by the SEC. And before that, this level over here, where we then did see price drop to the downside. So, price on Bitcoin is reactive to these key, kind of bearish retracement, bearish divergences or bullish divergences. So definitely understand that when you're kind of looking at Bitcoin, and definitely understand that price does seem very overvalued at the moment. So understand all of that and approach the markets carefully. Next to talk about though is gold. Gold's in a very interesting position, obviously, because we see that mirroring between the dollar and gold, but obviously we have the issue of world tensions playing into it as well. And currently it does seem like price is retracing to the upside after falling to the downside after that more hawkish news from the Fed. more hawkish US economic data. So now we are kind of on the upswing for gold on a retracement. So, but the key level that's kind of pointing out here is that 38.20, which lines up with that key liquidity level. So keep your eyes on gold. Lastly, to talk about in the charts is oil quickly, and price has seemingly reacted to that liquidity zone and support level. So keep your eyes on oil. To get through quickly and finally though is the economic calendar, and we do have quite a bit of data coming out today, and all of it's quite important. Now firstly, we are getting British retail sales data, followed by the Swiss industrial production figure. Followed by that, we're getting now the French inflation rate figure. So, of course, a very important Eurozone figure to understand, to factor into, the ECB's monetary policy, of course, as well as the US producer price inflation figure. So that is the most important piece of data that we are getting today. We are forecasting a 0.1% gain in that inflation rate figure. So definitely listen out for that, as well as that. Listen out for numerous Fed official speeches which are happening today. We've got numerous to note, Fed Bar, Fed Daily. So, many to listen out for. And finally, we are having the US consumer confidence figure being released. So lots of data to listen out for and look out for, and lots to look out for on the charts as well. We've got lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day and a great weekend. Make sure to enjoy it. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.